Hi everyone, and welcome to Philanthropy Impact's Walk in My Shoes series for professional advisors. Thank you for joining us today for another of our quick-paced fireside style chats. My name is Sophia and I'm the Director of Membership and Development here at Philanthropy Impact and your moderator for today. As a not-for-profit membership organisation with a mission to increase and improve philanthropy and social investment and to also encourage impact investing, we continue to bring you these sessions to support you and your clients in developing their impact journeys. If you have any questions about what we do and how we can collaborate, please get in touch directly with me. As always, this is a strictly 30-minute session. We are taking questions, and so we ask that you use the chat function to introduce yourself and have your say, and also pose questions to our panel. Please make sure to add panelists and all attendees if you'd like to interact on the chat, and remain respectful to all throughout. It's with great pleasure that I introduce our chair for today's session, John David, Head of Rathbone Greenbank Investments. And joining John, we welcome Bonnie Chiu, Managing Director of the Social Investment Consultancy, Sophie Lawrence, who's the Senior Ethical, Sustainable and Impact Researcher at Rathbone Greenbank Investments, and Rareș, Pamfil, Founder of Impact Agora and Impact Investment Advisor with ClearlySo. Thank you all for your time and insight today, and I will now hand over to John to make a start. Thank you, John.
Thank you very much, Sophia, and thank you very much for inviting me, and speaking on behalf of the panel, thank you for inviting us. We're looking forward to today's session. So just by way of introduction, I head Rathbone Greenbank Investments, and I have specialised in the field of ethical, sustainable and impact investment for 20 years. And as you can imagine, the space has changed incredibly over that period, and it's hugely exciting to see how much traction the space is now gathering and how rapidly things are beginning to change. And if I cast my mind back 20 years ago, the focus was very much on more traditional ethical investment, so perhaps that traditional focus on avoidance screening. And since that point, we have seen it rapidly evolve through various levels of the spectrum that we'll come on and talk about in a little bit more detail later in the session. But what's been interesting is that sometimes the terms used to describe responsible investment lump everything together, and I think that's wrong. And I think that much as we have seen the rapid acceleration of the take-up of areas like ESG, or environmental, social and governance integration, other areas are still lagging the wider growth, and I'm thinking here particularly in terms of what we might historically have called social enterprise investment, or perhaps now might called impact first investment. So maybe that's a good place to start. It's impossible to have a conversation like this without dwelling a little bit on terminology. Sophie, what do you understand by the word impact in 2021, and how does it fit in that wider responsible investment arena?
Thank you, John, and I'll try and keep brief to this point so that we can really get into the implementation and help people think about how to do that with their respective organisations. But I think we really have to define it, as John says, and I think that the sort of definition here, and there is commonality in how we think about this, is impact investments are investments that are made into companies or funds with the intention to generate positive, measurable social or environmental impact alongside a financial return. And as John said, this definition does leave a room for a really broad set of investments within that, some of which we're going to discuss today. But I think two key elements that really should be present when we're thinking about this are intentionality and measurement. So the investor's intention should include some element of both social or environmental impact and financial return. And while there's more consensus on metrics for financial return on investment, an impact investor should also be aiming to measure their impact. And before we kind of move from this important starting point of definitions, I think it's important to say that we are also seeing a lot of new regulation, which is helping to build consensus in how we're thinking about impact investment, because I'm sure that we're all agreed that the term is being used in a lot of different ways to mean different things at the moment. So just to signpost very briefly, and maybe we can pick it up in the questions if people have some specific questions around this. But first, we've got the EU taxonomy, which is the unified classification system of environmentally sustainable economic activities. And we know that social activities are also going to follow in the future. We've also got the sustainability related disclosures in the financial services sector, which is requesting disclosure of more information on the sustainability of investment portfolios. We've also got changes to MiFID II with a new requirement to include ESG considerations in the advice that investment firms are offering to individual clients. And we've also got work going on at the European Commission reviewing the non-financial reporting directive, which is focused on embedding sustainability into the corporate governance framework. So a lot of new regulation on the horizon, which is really going to, I think, bring increased consensus into how we're defining impact. But for now, back to you, John.
Fabulous. Thank you, Sophie. Rareș, would you agree with Sophie's sort of high-level overview? Is there anything that you've seen that might change the landscape in terms of how we define and describe this space?
Yeah, I agree with what Sophie said, and there's certainly a tendency to mix up different aspects, the ethical investment, the ESG, the private markets and the public, and as well as the impact first or social investment. But just to focus on one of those areas for 2020, I think actually one of the areas we saw the biggest change is in people embracing more of that ESG mindset and the consideration of ESG factors. I was listening to reading a family office research piece, and it said that 2/3 are going to broaden their investment assessment to include more ESG factors. So I think there is, in essence, an increased interest to impact, even in the kind of more mainstream investment arena. Even if we don't call that impact investment, I think the cat is definitely out of the bag in terms of companies and investors realizing that we need to be more holistic in our investment considerations.
So I think that's right. I think that's certainly a trend we've been seeing in our world as investment managers. Bonnie, how about you? What trends are you seeing in this space in 2020 and 2021?
Thank you, John. I think with COVID-19, it's remiss of us not to, mention the Build Back Better agenda, of course, and a lot of focus on inclusive recovery, and also thinking about 10 years away, well, 9 years now, until we have to achieve the Sustainable Development Goals. But I think what I've seen, I write on Forbes as well as a senior contributor on gender and diversity. I've certainly seen in the past year with Black Lives Matter, but also before with Me Too, there's been so much momentum around diversity inclusion as a centerpiece around impact investing. And I think there's a lot of work that's been done around whether it's racial justice screens for public markets investments, or gender lens investing funds for private equity, etc. But I think all these are kind of merging with the impact investing space. So for me, impact, I think definitely for this year, we have to look at how diversity inclusion is also part of that piece.
Yeah, and I think, Sophie, I know when we speak, we often see a lot of interaction between environmental and social factors. I wonder, in the world of social media and campaigns, whether there's a danger we lose sight of some of the bigger issues and trends as new areas emerge. But at the same time, I'm thinking they're all interconnected. But climate change, for example, is that still very much at the front of people's minds?
Yeah, I think probably what's maybe happened to your point there is that people are seeing the whole system as much more interconnected. So I think if you take climate change as a great example, there's been this increased kind of awareness that we need to bring everyone along that journey. It's not just about looking at that as an environmental issue, which you can put a nice clean box around, but actually how are we going to ensure that we have a just transition that is bringing everyone in society along that journey? And so as investors, we need to not only be thinking about the kind of disclosure that they're kind of giving us on the climate side, but how are they actually thinking about the sort of retraining aspects of the transition? How are they going to ensure that their products and services are available to all? There's a whole new set of kind of I think questions that we as investors need to be skilled at answering, and it does really need you to go across all those issues. And I think back to kind of Bonnie's point about the SDGs, you know, Sustainable Development Goals are a good overarching framework for us to help us think about that and actually put it into something that's manageable for us to use as investors. But definitely we're moving towards needing kind of to be much more kind of systemic in how we're seeing different issues rather than looking at them on their own.
Yeah. And turning back to a point you made earlier in the context of impact and what it is, I think two of the key factors you mentioned were that it had to be intentional and measurable. And I think that's particularly important now at a time when, you know, even today we're seeing elements of greenwash. It's quite easy to put an impact label on a product or service, or, you know, tie it to a company as a corporate. Bonnie, what are you seeing in the space of measurement so that we can really be sure that when we're looking at impact investments, they are genuine impact investments?
Yeah, that's always a kind of million-dollar question in the field of impact investing. I think, of course, at the very basic starting point is thinking about well, depending on your investment strategy, but thinking about your impact as an investor, and then the impact of your investment. So that's a very easy way of thinking through that. And you know, the impact management project, of course, which has gathered a lot of consensus among investors, use that ABC model. Avoiding harm, benefit stakeholders, and contributing to solutions. Much more focus now really on intentionally contributing to solutions is like the gold standard, I suppose, in impact investments. But I think what I've seen in the past few years in terms of progress is, before we weren't really sure what good looks like. So you can say, okay, an investor articulates the impact we have and the impact our investments have. But what's the bar that we measure each other against? And it's not as simple as the measure of profitability. So what I've seen in the past 2 years is really the best practice kind of standards around impact measurement. So I really like the impact principles by the that's hosted by the International Finance Corporation, because it gives you a set of to-dos and kind of step-by-steps. What does good really look like, and how can you measure the activities that you do? And the other thing that I know the UN is trying to do in linking impact investments specifically to drive the SDGs is the SDG practice standards. And the SDG practice standards, they're still kind of emerging, and but I know they're doing a lot of work in this year and next year around impact standards for private equity funds, for bonds and enterprises. So I think, you know, to summarize, you know, we can have a day-long discussion on, you know, benchmarking, what does good really look like, you know, is 10% of reduction in carbon emissions better than 10% increase in well-being? You know, we can go to the ends of the world on this, but I think at least now we have those practice standards to measure investors' activities against, and how to hold them to account around their processes. So I'll leave it there, and I'm sure Sophie and Rareș have other comments too around measuring impact.
Thank you, Bonnie. Rareș, let's start with you. What are you seeing in terms of either what you can provide to investors or what investors are asking for in the field of measurement?
Yeah, so just to make it concrete, this year I worked with a family office where the principal made it explicit that they want to become a solid kind of impact practitioner, and to build a portfolio, to understand the impact their investments they have, to be known as a leader among their peer group. And actually within a year they went from, well, we have some things in our portfolio that we think are kind of impact, to having a framework which says, okay, this is how we score an investment when we make it on various considerations, and then looking at their whole portfolio and seeing who are the leaders, who can we kind of influence through our holdings to bring up. And this is focused on the private equity and venture capital, but then they brought in data through an external firm to also look at their public equities portfolio, and actually turns out that, you know, even if you have an ETF, there's often an ESG substitute for it, or you can get a thematic fund if you want to grow your portfolio that's actively managed. So actually, when you have a mandate to measure impact, then the team, and with the help of advisors, can actually deliver on that quite quickly and get to a point where, you know, at the end of the year at your board presentation, you can see, you know, how have you improved from last year? What are the things you should do from a portfolio management perspective, and where do you have gaps in terms of your goals of, say, healthcare or climate change investing? You know, maybe actually you haven't invested as much as you thought, and bringing it back to kind of the data of what the research says. You know, 87% of family offices involved in impact investing say that these investments have satisfied or exceeded their expectations in terms of performance and or impact. So I think there's a lot of proof points out there for what people have been able to do, and that's actually a lot easier than it used to be.
So it sounds like there could be a little bit of a snowball effect, because in a sense, the more that we can measure and report, the more tangible the changes we make are. Sophie, how about from your perspective, sort of challenges and opportunities in this space?
Yeah, so I think firstly, it's encouraging that the two standards that Bonnie mentioned are the ones that we're looking at as well, both the IFC operating principles and impact management projects ABC framework. And I think that tells you how far we've come in the last 5 years to get some kind of consistency around the steps that you should follow when it comes to measurement. I think really the next step is, I think that as investors, we all need to commit to being much more transparent and actually start using these frameworks and putting them out there. And as Rareș says, it can be a really good strategic tool for us to go through, which can help us think about, are we focusing on the right areas? Do we want to be, you know, shifting away from certain things that we can maximize in other areas? So these are really good strategic tools for us that will help to, you know, really make good investment. But I think we need to all really commit to actually getting them into our reporting, making sure that they're public, because I think that it's only going to come with that sort of external scrutiny and sort of, you know, our clients seeing them and us sort of socializing them, that we can really improve them over time. And I think that's the step we're really at now. We have some consistency in the market, and now we really need to implement and commit to doing that on an institutional basis.
Okay, so just starting to see a few questions coming through on chat, one of which linked to this particular topic is how we think of impact versus outcome. Does anybody want to pick up on that?
Yes, I'm happy to very quickly, and I think impact in the context of, you know, impact is an overused word, I think, but in the context of impact investing, you know, we see it as a lens through which you look at all the investments, back to what Sophie mentioned earlier, that is intentionally driving social and environmental impact. But I think impact in the context of impact measurement versus outcomes, impact is kind of the long-term thing that you want to achieve, and that is underpinned by outcomes, which are much more measurable, and they also work alongside outputs. So outputs are the concrete things that your investment, your organization is can be held to account to producing, whereas outcomes is really the change that you're driving among your stakeholders. Yeah, so I think just some definitions there. Hopefully it's helpful, but happy to go into any examples in the chat if you would like.
That's beautifully clear. Thank you, Bonnie. So let's move on to think about what role we all have to play in this space, and that ties to another question we've had, which is around fiduciary duty, and a question around how we justify presenting impact investments to clients to whom we owe a fiduciary duty. Would we put them in a discretionary portfolio? So So speaking from a sort of discretionary portfolio manager perspective, yes, absolutely. I think from my perspective, the considerations I would think of with a client will always come down to suitability. You know, that's our financial duty. That is what we are measured against by that we're going to see at the end of this year. So we will be required to ask and assess a client's sustainability preferences, but we need to see those in the context of their wider suitability requirements. And I think perhaps it comes back to the comments we had at the start of today's session around that spectrum of capital. You know, I certainly wouldn't see it being appropriate for many certainly clients having a portfolio comprising impact first investment solely, but certainly I think there could be an element of impact right across their portfolio, and I don't think there should be a financial price to pay or a heightened level of risk incurred in doing that if it's done effectively. That's perhaps a portfolio manager's perspective. What else do you think we might be doing in this space? Rareș, let's start with you.
So for people who work in foundations and family offices, I think it's very important to get the mandate clear so you can actually go and deliver it. Otherwise, it's discussions about kind of what we're here to do. You know, is it just to kind of screen out the bad stuff? Are we doing things because they're current? But so actually, if you sit down and agree on a mandate and what drives the investment policies, then everyone in the kind of investment supply chain can deliver that. So there is now product that you know, in terms of investment returns has actually outperformed this year. At least the ESG funds have done better than the non-ESG funds. I was referring to the BlackRock and the Morgan Stanley research on the topic this year. So it's important to agree on incorporating those objectives into the investment policies. And in the case of family offices who work with a team, it's also important to clarify which areas they should focus on, because that means that, you know, it affects how you originate deals. It affects what partnerships you build, what advisors you bring in. So I'd say now there's no more excuses to kind of not be able to do impact investing. It's just important for principals to instruct their team. Otherwise, the team will say, well, maybe this is too risky, or maybe, you know, I haven't been asked to do this, or I'm not sure that it's important enough, you know, or maybe they'll shoot me down if it makes 2% less. So it's important to be clear.
Bonnie, how about you? What would you like to see happening in this space, and what role do you have to play?
Thank you. So I think on the impact measurement side, I think, Sophie, your points are spot on about having more transparency and also ensuring that impact management actually affects decision making. So not have it as an add-on or something you do towards the end, but really integrate it into the part and parcel of the investment process. So I think there's a lot I would like to see with impact measurement, ensuring that investors actually allocate resources to impact measurement, as well as allocating resources, you know, down the chain if you're requiring such data from the companies you invest in. I think secondly, I would like to see just much more honesty about also the limits of impact measurement and sharing of data. That really hasn't happened. I think we have got to a point where we agree on the standards, whether, you know, the SDGs and the IRIS metrics, I think, being the most popular frameworks around how investors collect impact. But we haven't really got to that point on sharing and benchmarking ourselves against each other. And, you know, if we think about financial markets and the power of financial markets, it's really the power of being able to benchmark ourselves against each other. So that's definitely something that I would like to see. And I would finally like to see diversity, equity, and inclusion being part of that conversation around impact. I think especially in the US, we've seen quite a lot being done around racial justice. Gender lens investing has been talked about quite a lot. I would just like to see more momentum around this, because tying back to the COVID-19 and like Build Back Better agenda, this is actually a really good time for us to really think about the inequalities in our society and how we can use investment to reduce that.
Fantastic. And I'm conscious we're going to have people listening to this call who are on the sort of full range of super expert to perhaps their first introduction to impact. But Sophie, where do people go to get started in this space if they are new to it?
Yeah, so there are quite a few places. I mean, we've mentioned a couple of the frameworks on the measurement side already. Obviously, Philanthropy Impact Capital, a great network in this area. There's also a network called Tonic and the Mission Investors Exchange, and there's also the Global Impact Investing Network. So, you know, all worth a Google, and depending on your specific questions, I'm sure a lot of them are out there. And there's a lot of kind of multi-stakeholder groups that are out there where you can get support. And then there's also, you know, there's obviously products that are growing the market for impact related products, both for retail investors or for all different types of investors really. Just a particular resource there, Impact Base, which is a searchable online database of all the impact investing funds as well. So it really depends on what your question is, but I'm sure that you'll find something that's already being done. And I think just to stress that point around kind of multi-stakeholder collaboration, I think this is an area where, you know, there really is good collaboration between kind of policy, academia, and then investors themselves, and people are really willing to sort of share learnings, and a lot of investors who've gone through the process have also published brilliant work around how they've set up their impact investing strategies. So definitely look out for work before you start to work through it on your own.
Fantastic. Rareș, can I ask you the same question? Where do people get started?
Well, I think they're all have access to investment advisors and investment teams, even if it is something as simple as, you know, a stocks and shares ISA platform. And within that, you will always have that impact option. So you just need to prioritize it and start from there. I would say also that, as Sophie said, peer groups are an excellent place. To do that for the foundation space, there are groups of funders and foundations that have committed to make impact investments. Is one called the Social Impact Investors Group, run by the Association of Community Foundations and Big Society Capital. In terms of the private markets and the high risk investments, I think it's important to recognize that that's where you can sometimes create the most immediate impact and go to the root of the issue. But you need support with kind of due diligence and sourcing. So that for that, it helps to be part of kind of groups of investors, or to ask your advisor to find such opportunities and say that you're kind of willing to fund more high risk things.
Great. And conscious of time, Bonnie, anything to add to Sophie and Rareș? We can hand back to John.
You want to add anything? Oh, so interested. I forgot I had to come on. I was just listening. Quite intriguing. Thank you, Bonnie, Rareș, Sophie, and John. Could we just end with final words of wisdom? And I'd like to say that we're launching a new training program for wealth advisors on this whole issue of suitability. So thank you for everyone for having input into that as well. So final words of wisdom, Rareș.
Lots been covered already. Thanks, John.
Okay, Bonnie.
Well, don't overthink impact. I think you'll learn as you go.
Okay, thank you, Sophie.
Yeah, it's already been mentioned, but I just want to stress it. I think this commitment to transparency around reporting is really important.
Great, thank you. And thank you again, everyone. John, final word to you, and then over to Sophia.
Yeah, I just think being open to the conversation and listen to clients, listen to what they want. You may find that they are a fantastic source of information that will help you help them.
Great, thank you very much. Sophia. Sound.
On mute. Thanks, everyone. That was brilliant as always. I just want to say that we've been asked for some links. I will send them out to everybody via email, all the references mentioned today by Sophie and Rareș. And join us next week, please, for our Monday session, where we'll be discussing the important topic of decolonising aid with our members Oxfam. And we'll also next week be holding our hour-long virtual event, which will be entitled Investment in the Arts, How to Achieve Impact. That's on Thursday at 4 p.m, Thursday the 4th of Feb. Thank you all again for your time and insight today, and have a great week. Bye-bye.
Thank you. Thanks. Bye.
Thank you.